Welcome back to the Halftime Report. The traders are answering your questions. Let's go to Jim first. For Jim, from John in Belgium, going international. What do you think about Boeing's future?
Yeah, I still think the future is bright. Look, at this point, all of disaster is priced into the commercial aerospace side of it. What you've got is a great defense business with a call option on the commercial aerospace side. And frankly, the 737 MAX is starting to pick up steam. They're getting some flight tests done with the European Union and Canada. So maybe that call option on the commercial side is worth something. So I'm staying long Boeing.
All right, staying long Boeing here. Next up here, Steve Weiss. Shankar in Illinois asks, Steve Weiss, you brought Brookfield Renewable Partners any promise in solar for long?
Look, as Anastasia pointed out, and I discussed on the show, I believe, last week, that even though a lot of these stocks are at their 52-week highs, this is the trend going forward, getting away from fossil fuel. Brookfield has the added benefit of being with the top alternative manager in the world. In my view, we talked about Carlyle, KKR, Apollo. These guys at Brookfield are unbelievable. Not only real estate, but renewable energy. I think these stocks all go a lot higher.
All right. Next up, for John Nigerian from Karen in Texas. Buy, sell, hold, DraftKings.
Hold on to this one, Dom. I know it got downgraded today. I know Penn got downgraded as well. I am not a buyer of either of those theses. I think both of them go higher. I think the Big Ten was talking just as we came on the air, Dom, about having a season for football, perhaps delayed into the fall. Well, I guess for sure delayed into the fall. But the more football we have, the more you're going to see those two stocks do very well, Dom. So I would say hold on to it. And if indeed the Big Ten votes to have a season, I think that bodes well for both these stocks.
All right, gaming for sure a big focus today. Anastasia from Dennis in New Jersey. What are the most important factors you look at when evaluating a stock?
Great question. I'm going to take a look at it from a growth stock perspective, which is where we focus a lot of our attention. It is earnings growth rate, and it's the revisions to that earnings growth rate are the two most important factors. So I want to look at stocks from a growth perspective that are going to give me that above average, above benchmark earnings growth rate. And there's a lot of those stocks that are tied to some of those themes and megatrends that we talked about. The second thing that's really important is where are the consensus expectations and what do we think is likely to happen around the earnings reports? Do we have an above or below consensus view? So oftentimes when you can extrapolate that above consensus view, you can end up with picking a stock such as Salesforce that is going to surprise, beat and raise, and be up 20% on the day. So those are the two most important factors, earnings growth and revisions to that.
All right, circling back now to Jim Leventhal from Paul in Florida. What is driving Disney up?
Well, this is a hybrid stock right now. You've got the positive of the streaming business, which is going gangbusters. And let's just say that the COVID-19 gets worse. I hope it doesn't. But if it does, that streaming business is only going to get better. On the other hand, if, as we all hope, the COVID-19 pandemic gets lesser and lesser, then the theme parks start to reopen more. The studios get back into business. So this is a hybrid stock that's got the best of both worlds going for it right now.
All right, and next up to Steve Weiss from Craig in Virginia, the great Commonwealth. Why has Keysight reacted so badly since their earnings report?
First of all, Fred, my rescue dog, sent in a question from New Jersey and wants to know if Gambling Jim really bought Roku up 10% in a day. But we can leave that for another show.
I did.
In terms of Keysight, I actually bought more after the earnings. I thought it was a phenomenal earnings report. Great guidance. We're just seeing that. Companies trade down after earnings. I still like the stock. I still think it recovers and goes higher to what they were before they reported earnings.